Hello everyone, here are the latest market news on May the 14th, 2019. Iran minister visits India after US sanctions. Iran's foreign minister Javad Zarif will hold talks with his counterpart in the Indian capital on Tuesday after New Delhi stopped purchases of Iranian oil this month in the wake of renewed US sanctions. Iran minister told that India is one of their most important partners, economic, political, and regional. Washington wants to block Iran's oil exports after U.S. President Donald Trump pulled out on the 2015 accord between Iran and six world powers to curb Tehran's nuclear program. The sanctions have more than halved Iran's oil exports to 1 million barrels per day or less, from a peak of 2.8 million barrels per day last year. Exports could drop to as low as 500,000 barrels per day from May. Iran is insisting on exporting at least 1.5 million barrels per day of oil as a condition of staying in an international nuclear deal, sources with knowledge of Iran-EU talks said on Monday. Vodafone's revenue falls. Investors frustrated because of Vodafone Group plc's failed efforts to revive revenue growth that have pushed company's share to their lowest in a decade. The stock has continued to underperform its peer group this year, falling 13% compared to a 3.7% fall in the Stoxx Europe 600 telecommunications price index. Moreover, Vodafone Group's dividend has cracked under the strain of fallen revenue, soaring spectrum costs, and a $21 billion acquisition in a grim reality check for Europe's struggling phone industry. It was unclear how new CEO Reed could hold payouts steady and still afford new mobile spectrum, network upgrades, and the $20.7 billion purchase of Liberty Global plc assets in Central and Eastern Europe. Organic service revenue fell 0.6% in fourth quarter from a year earlier, versus the 0.7% drop forecast by analysts in a company-compiled consensus. U.S. prepares new tariffs on Chinese imports. The United States and China traded blows on Monday in the latest escalation of their tariff war, unnerving Wall Street and threatening to draw American consumers into the fray for the first time. Both nations, which just days earlier had anticipated sealing a comprehensive commercial deal, instead took steps to raise the trade barriers. In Beijing, the Chinese government announced plans to impose tariffs on $60 billion worth of American products in retaliation for U.S. tariffs that President Trump increased on Friday. Trump, meanwhile, began the process of expanding U.S. tariffs to cover all $540 billion in Chinese imports, a potentially seismic jolt to the global economy that is expected to raise prices for everyday products such as cell phones, sunglasses, cameras, and televisions. Oil prices rise on U.S.-China trade tensions. Oil prices were moving higher on Tuesday, though gains were checked amid an escalation in the trade war between the United States and China. Brent crude futures were up 7 cents or 0.1% at $70. U.S. West Texas Intermediate crude futures increased 0.1% to $61.11 per barrel. Headlines from the Middle East grabbed attention early in the session after Saudi Arabia said two of its oil tankers were among those attacked off the coast of the United Arab Emirates, describing it as an attempt to undermine security of supply amid United States-Iran tensions. But analysts said the U.S.-China trade war continued to cast a pall on the market as a whole. China on Monday ignored a warning from U.S. President Donald Trump and moved to impose higher tariffs on a range of U.S. goods, including frozen vegetables and liquefied natural gas.